Quirky Market Indicators, brought to you by Hot for Stock. What is a market indicator? Well, it's a series of technical indicators used by traders to predict the direction of the major financial indexes. Most market indicators are created by analyzing the number of companies that have reached new highs relative to the number that created new lows, also known as market breadth. Some, however, are a little less traditional. 5 series or 3? Well, according to the Oregon-based firm C&W Marketing Research that analyzes the auto industry, a telltale sign for a downward market is when BMW dealers notice that a large portion of their shoppers who come in for a 5 series are settling for that shiny new 3 series instead. A positive sign, though, when the shoppers who are looking at that 3 series end up buying that luxurious 5 series. Who wears short shorts? This theory could be getting those guys who otherwise wouldn't give a wink about fashion watching up on the latest runway trends. With speculations that the direction of the economy can be predicted based on how long or how short the length of the hems are that show up in the new fashion lines. If the models are rocking itty-bitty skirts and shorts, markets, like the hemlines, are on the rise. However, the opposite is true if those hemlines are heading south. The rationale here is that the longer the skirt worn, the lower the confidence of the general consumer, which reveals fear and tighter budgets. When those hemlines are skyrocketing, so are the markets, along with consumer optimism and confidence. Rock that bass. Have you listened to the top songs lately? If so, according to assistant professor at the Polytechnic Institute of New York University, Philip Mayhem, you may be getting a clue as to how volatile the markets are. In a study released in late 2008 between the volatility in the market and trends in the latest chart toppers, an interesting theory was developed. The study involved songs from the Billboard Top 100 chart from 1958 through 2007. He found that songs that have a steadier beat variance were preferred over those that had a higher beat variance in times when volatility was high. Mayhem suggests that mood is the key driving factor of this indicator, which has been known to affect the markets. Cheers! Beer and wine aren't just good for drinking anymore. According to this theory, when the economy is down, beer sales go up. But wine sales go down, so when more champagne bottles start popping, this could be an indication we're back to a bullish market. American Beauty. The Sports Illustrated swimsuit issue isn't just a hot topic in the world of adolescent boys, it's also a hot topic in the world of economic indicators. How, you might be asking? Supposedly, it's a good indication that the S&P will show a return above its historical rate for the year when the cover model is from the United States. When the cover model is non-American, the S&P is predicted to underperform for the year. Does this theory hold up? The average annual return of the S&P 500 was 13.9% when the cover model was American, while a non-American gracing the cover, the average return was only 7.2%. From 1979 to 2008, the average annual return on the S&P was 8.87%. Coincidence? Kiss this. Lipstick as a bearish indicator? You got it. The sales of lipstick and other cost-friendly luxuries tend to increase in times of economic uncertainty. This is partly credited to the quick pick-me-up feeling you may get from using these items. This trend was noticed by the chairman of Estee Lauder, Leonard Lauder, who noticed a surge in lipstick sales after the September 11 attacks occurred. So the next time you're wondering if we're in a bullish or bearish market, go ahead and turn to the women in your life. Brought to you by dailytape.com. Follow us on Twitter at dailytape.